IT stocks, they're the top sectoral gainers ahead of its Investor Day. Infosys announces a collaboration with Anthropic to develop advanced enterprise AI solutions. Happiest Mind also hints at an AI partnership announcement soon, and stocks across the sector surge.
Couple of counters abuzz on account of order wins. Kochi Shipyard emerges as the lowest bidder for a 5,000 crore Navy contract. Texmaco Rail lands an order worth 220 crores to design, supply and install signaling equipment.
Shares of KFintech perk up on brokerage upgrades for the second trade session. The stock's doing well. Jefferies has upgraded the stock to buy with a target price of 1,300 rupees. Additionally, after the resignation of the earlier CTO, the company has appointed Nazish Hussain as the new Chief Technical Officer.
Shares of Ola Electric struggle to find a bottom. Stock scales fresh 52-week low and has plunged 20% in the last 2 months. The pain mounts as brokerage continues to downgrade the stock. Citi downgrades to a sell from a buy, slashing the target price to 27 rupees per share versus 55 rupees earlier.
And among stocks which are gaining, we have TVS Supply Chains up 3% after an MOU with an Italy-based company to enter India's $28 billion aerospace and defense supply chain markets. And the stock higher today.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. All the indices that you can see on the screen is green. So textbook play, really. Yesterday, we saw the buying from the lower levels got rewarded, and today as well seems to be the same case as playing out Mangalam. And the tech index, that's finding its form. That's the one that's been pulling us back. But today that's up, I think, close to around 1% or thereabouts. So 31,300 has become 33,300 on the tech index. I mean, at least you're feeling a little bit better with regard to this space.
After a 15-16% downtick, you know, the street would have liked for some bottom to find itself. But let's see whether this sustains or not. Sustaining this move would be extremely crucial. Right now, there is a fair amount of excitement around the AI summits and all these announcements that are coming in. Infosys would be the key stock to watch today as its analyst day is underway today as well. Just a couple of other sectors as well, Nigel. You know, the Nifty Bank, which had been outperforming for a while, yesterday as well did a little better. Today was underperforming for the start of trade, and that too has shown a sharp surge, up around 1/3%. Yes, not as much as the IT index, but that recovery has got the momentum back in the market. So you have two heavyweights. We have Nifty Bank as well as the IT index, both of them doing well. And the Nifty Bank actually is led by the PSU Bank index. So if you pull up the PSU Bank index, you know, there's a big surge that you're seeing. And even at the bottom of your screen, the ticker team's telling you, you know, a big surge in Punjab National Bank, IDBI Bank, Canara Bank. You have it, you know, any stock that you look at, Bank of Maharashtra as well, has seen a big surge. So a lot of these individual stocks buzzing around and the market on the whole doing well. Let's see, after crossing the 20-day moving average yesterday, whether the Nifty crosses the 50-day moving average, which is placed at around 25,765. Let's welcome Saumil Mehta of Mirae Asset Share Khan for a quick technical check on the market. Saumil, yesterday we recovered from the lows. Today we recovered from the lows as well. Do you think we have enough to build onto this momentum and go ahead? Or maybe from oversold levels, we've moved higher and now maybe the market consolidates?
Good morning to everyone. We are still around 25,500, 25,700, but there's still the momentum still remains positive. I'm pretty positive in the short term, in the medium term. Crucial supports 25,400, 25,300, and we've been bouncing back from these levels already a couple of times now, and taking support at 20 daily moving average, which is a very good sign for the markets. I think this momentum should continue on the upside. Resistance, as we know, 26,000 is a very, very crucial resistance. Once we cross 26,000, close about 26,000, I think the momentum will strengthen from there. Sectors like PSU banks, defense, pharma are looking good. The good news is that the IT pack has started bouncing back, which is great from here. So overall, view positive, and I'll be targeting 26,000 and above. I'll be targeting above 26,400, 26,500 in the medium-term outlook. But at this point of time, we should more focus on sector-specific and stock-specific action.
All right. So what sector and stocks do you think are tradable right now with the moves that we're seeing?
I think PSU banks, defense, pharma, three sectors I'm focusing on. I have two calls on Indian Bank and Laurus Labs. PSU banks are looking really good from here. Indian Bank has been consolidating for a little while now, but I think we've got a very good momentum here, taking support at 20 daily moving average. A flag pattern has broken on the upside. Great setup. Stop loss would be 865 and target would be 925. The second call is on Laurus Labs. Laurus Labs looks great as well. Just taking support at 200 daily exponential moving average, bouncing back from there, trading about 20 and 40 daily moving average. Good setup. Stop loss would be 985 and target would be 1090.
Okay, all right. Thanks a lot for that, Saumil. Well, let's shift focus to our special segment then, where we get you a few ideas for profit from Money Control Pro. Anand Chaudhary of moneycontrol.com joins us to talk about a stock that he's tracking rather closely, Jyoti CNC Automation. Go ahead.
Today we are talking about the third largest player in metal cutting CNC machines, that is Jyoti CNC Automation Limited. It manufactures CNC machines for various industries such as automobiles, aerospace and defense, general engineering and EMS. Company has shown a very healthy growth in last 5 years, driven by rising demand for precision engineering in India. In FY25, company has increased its capacity from 5,000 machines to 6,000. To support the sustained demand, the company has announced another 450 crore of capex to add 10,000 machines, taking the total installed capacity to 16,000 machines by September 2026. It has also recently doubled its capacity in European subsidiary Huron to 240 machines. The management highlighted that European demand is largely defense-led, citing French customers, and noted a broader pickup in defense spending amid recent geopolitical developments. The current order book remains healthy at 4,585 crore. Defense contributes 40% of that, providing a 24 to 30 months of revenue visibility. The management maintained its 25 to 30% revenue growth guidance over the medium term. The existing manufacturing base is operational near full utilization, making the ongoing capacity expansion a key growth trigger for the company. Successful and timely commissioning will unlock incremental revenue volumes while improving execution flexibility for large and complex orders. The stock trades at 27 times on FY28 earnings.
Okay, all right. Thanks a lot for that. Well, time to slip into a short break. You come back. We continue to focus on markets. We'll also get you some insight onto some stock-specific action. Don't go anywhere.
Welcome back. You're watching us here on Chartbusters on CNBC-TV18. The market's actually come off the highs, so that's something that we'll have to monitor very closely. The Nifty is now below the 25,700 mark, also just above the flat line. So holding in the green by about 4 or 5 points as we speak. And the Nifty Bank actually has come off the highs. It will be very interesting to see whether the IT index has also seen some selling from the top or not. So the Nifty Bank is now just 73 points higher. We have the IT index that should come up for you as well. That's fairly stable, around 1.72% in terms of gains. But pains mount for Ola Electric after what was a downbeat December quarter. Remember, the stock was at a record low already and sees further sell-off where the company's market share has shrunk, losses continue to be elevated, revenues halved, and now brokerages are downgrading as well. Sudarshan joins in with a complete lowdown. Sudarshan.
So another day when stock is at record low. In the last 2 months, stock has slipped more than 20%. And if we talk about the volume front, yesterday volume was 8.5 crore versus 10-day average of around 3.86 crore. And yesterday also we saw that few brokerages are downgrading the stock. Today also Citi has come out with a note downgrading the stock to sell from buy and reducing the target price to 27 from 55 rupees per share. It said that AV penetration for Indian two-wheeler market has been sluggish, and especially Ola Electric has lost market market share. In January 2026, company's market share stands at 5.87% versus 25% market share that company used to hold in January of 2025. Citi says management's efforts to improve product and service quality could take some time to fructify, but healthy gross margin trends and better operating leverage could boost EBITDA. Negative cash flow as of 9-month FY26, free cash flow was at minus 1,530 crore. That could result in the concerns related to the balance sheet. It has cut estimates to target multiple to 3.5 times from 4.5 times. Now, in the start of FY26, Ola Electric had given the guidance. Now, on the auto business EBITDA margin, the guidance was plus 5%. As of 9-month FY26, it's minus 6.4%. On the gross margin, range was 35 to 40%. As of now, it's at 29.6%. Volume range was 3.25 to 3.75 lakh units. As of now, company has done just 1.5 lakh units. And on the revenue front, range was 4,200 to 4,700 crore. As of December, company has done just 1,988 crore. So these things are reflecting in the stock price and also in the earnings that company has been reporting.
Got it. Thanks a lot for that, Sud. Well, keep an eye out on the markets. We were trading well in the green, 50 points up. The Nifty has seen a sharp decline, and both the pillars of the market, they seem to have slipped a little bit. You pull up the tech index, the heavyweights out there, they have slipped considerably, almost moved into the red. And the Nifty Bank, that's been the star batsman, that in fact from being up 250 points, it's up only around 30 points. So just keep an eye out on both those two. But talking about tech, Rima has been reading on a day-to-day basis, brokerage after brokerage. Rima, what's on your radar today? Tell us what brokerages are making on the tech space.
Well, I think it's a question between near-term and long-term. It's a question between value and the kind of valuation and the kind of growth rate. So UBS says, well, in the near term, maybe there is a bit of overreaction, but the questions around the terminal growth rate, especially over the medium term and long term, cannot be ignored. And therefore, it all boils down to how quickly Indian IT companies can adapt and defending growth from here on. And again, they're not talking about the near term, just FY27. They're talking over the medium term. Defending growth will require not just pricing and a little bit tweaking in the delivery model, it will require companies to move up the valuation change. On the subject of valuations, yes, large caps are trading at 16, 20, 21 times, which is cheaper than the historical valuation. But again, they're saying it all boils down to growth and how quickly Indian IT companies can adapt. Just in the near term, they said that we do see an overreaction. And in the near term, they stick to their thesis that we are seeing an improvement in the environment. Nomura believes that perhaps also the sell-off could be overdone because they seem this to be a case of more front-loading of the pains, where the stock is pricing in an extinction of the old pricing business models before gains from the new business model emerge. Valuations, they say, have corrected meaningfully. Valuations for the large cap IT names, if you compare it to the 5-year average, are down 12 to 39%. Transition periods, they say, are painful, but given the free cash flow yield, the dividend yield, they believe there will be a floor for the Indian IT companies sooner than later. They've again distilled it down to a couple of scenarios. One, if the Indian IT companies' revenue growth stays at 2-3%, maybe no growth, stagnates a bit, then valuation multiples derate very sharply, 10 to 12 times, which means massive downside from here on. But if growth rates get back to their historical levels of 7-8%, then valuations stay around early 20s. But if Indian IT companies can really be the winners in AI orchestrators, then valuation multiples can actually expand from here on and re-rate. So it boils down now to how Indian IT companies adapt and what the growth rates over the medium term will be. And that is something I think very few people on the street still have clarity because the situation is evolving very rapidly.
Take that point, Rima. Situation is evolving rapidly, not just for the IT space, but also for the markets right now. Moments ago, we spoke about the Nifty being flat. Thereafter, it moved into the red, and now it's formidably moved into the red. When we started the show, all the 4 indices were actually in the green. And now, as we speak, they're all in the red. And while IT and, the Nifty Bank have moved lower, pull up the intraday chart of Reliance. You would see Reliance also weighing down on the frontline index. So the large heavyweight that you have, Reliance is actually at the low point of trade. IT index, while it's still in the green, it's off highs. Reliance, that's the one which is down about 1.2% at the low point, pressuring the frontline index on the downside. And now, as we speak, we are firmly in the red. But let's get you some highlights from the AI summit, which is currently underway in Delhi. The CEO of the AI giant, Anthropic, Dario Amodei, is in India to attend the summit. He was in Bengaluru yesterday to announce the company's new office. He did say that India is the second largest market for the company's popular chatbot Claude, and he added that Anthropic's business run rate has doubled in India in just the last 4 months itself. A conversation you'd love to hear.
Anthropic's business, its run rate revenue within India has doubled over the last 4 months since I last visited. On Claude Code may have grown even faster. We're just going through the ability to kind of build software with AI and build as kind of developers on top of AI and build new applications, and I think again just the kind of efficiency of the market here, the energy of very large numbers of people wanting to find something and build something, I think that greatly exceeds what I've seen anywhere else. You shouldn't build for where the AI models are now. You should build for where they are in a year or two. If you're a large enterprise, if you're a big effort trying to build something, it's going to take a while to actually deploy and test things. So you should be imaginative about where the technology is going to go. Don't build for step 4 out of a 10-step workflow. Try and do the whole workflow, even if the AI model isn't quite capable of it yet. The companies that have understood that, the kind of users that have understood that, I think have gotten much further ahead than others, and they kind of see the future because they're able to use models in ways that correspond to a product that we haven't released yet.
Well, that's the mega exclusive that you're going to be looking forward to. So we'll wait by for that. For the time being, we slip into a short break, come back, continue focus on markets. Welcome back. Well, the markets are trading more or less flattish now. The Nifty has seen a sharp downtick, was down 50 points, now it's down 20 points. The good news is that the Sensex has moved back into the green, while the Nifty Bank as well has come off from the top, though as we speak, it's sitting with a gain of closer around 50 points. I think the tech index is looking a little bit nervous. It had a 2,000-point rally from Friday's lows to today's high, but some kind of profit-taking creeping in there. But your portfolio could be feeling good. Number of stocks advancing, outweighing the number of stocks declining. Tell you what, we'll wrap up on this edition of Chartbusters.
What I'd say is just hold on for like 5 seconds. We started with all the indices in the green. In the middle of the show, all the indices moved into the red. Let's see whether we can hold on to a bit and see if all the indices go back into the green or not. For now, 3 are okay, but our director says whether the indices go back or not, we got to wrap the show, and that's what we do. All right, thank you for watching Chartbusters. On the other side, the team of Trading Out comes up.